The promotion that changed everything. Michael was 25 years old when he landed his first decent-paying job. He wasn't rich, but for the first time in his life, he felt hopeful. His small apartment was enough. His used car got him to work every day. He packed lunches, tracked his spending, and slowly built a savings account. Then something happened. He got promoted. His income jumped by several $1,000s a year, and suddenly he felt like he deserved more. He upgraded his phone, leased a newer car, moved into a nicer apartment, and started eating out more often. None of the purchases seemed outrageous by themselves. Each one felt earned. Friends congratulated him. Family told him he was finally enjoying the rewards of his hard work. What Michael didn't realize was that every raise was creating new monthly obligations. Instead of building wealth, he was building a more expensive life. Years passed, and every increase in income brought another upgrade. A bigger apartment became a house. A house became a larger house. A practical car became a luxury SUV. His income kept growing, but somehow his bank account never seemed to grow with it. The trap nobody talks about. By age 35, Michael was making more money than he ever imagined. On paper, he was successful. He drove a beautiful vehicle, lived in a large house, wore expensive clothes, and took vacations that looked impressive on social media. Yet every month felt stressful. The mortgage payment was large. Car payments never seemed to end. Credit card balances appeared after every holiday season. The more he earned, the more he spent. One afternoon he met an older coworker named Robert. Robert drove a 12-year-old car and brought lunch from home every day. Most people assumed Robert struggled financially. Then Michael discovered Robert owned multiple rental properties, had a large investment portfolio, and planned to retire early. The difference wasn't income. In fact, Michael earned more. The difference was habits. Robert had avoided the biggest financial trap in America: lifestyle inflation. Every time he received a raise, he invested most of it. Michael upgraded his lifestyle. Robert upgraded his net worth. The real cost of upgrading everything. That evening, Michael decided to calculate how much his upgrades had cost him over the years. The numbers shocked him. The luxury vehicle alone had consumed tens of thousands of dollars in payments, insurance, and depreciation. Dining out regularly cost more than he expected. The annual phone upgrades, streaming subscriptions, premium memberships, and impulse purchases added up to hundreds of thousands over time. Then he looked at what those dollars could have become if invested. The math was painful. Small monthly amounts invested consistently could have grown into substantial wealth through compounding. What felt like harmless upgrades had silently stolen years of financial freedom. Michael realized something important. Wealth isn't destroyed in one dramatic decision. It's usually lost through thousands of small choices repeated for decades. Every upgrade seemed insignificant at the time, but together they created an enormous opportunity cost. The habit that built wealth instead. Michael decided to try a different approach. The next time he received a raise, he didn't upgrade anything. Instead, he increased his investment contributions. When friends bought new vehicles, he kept driving his reliable car. When coworkers moved into bigger homes, he focused on paying down debt and buying assets. At first it felt strange. Society constantly encouraged spending. Advertisements promised happiness through ownership. Social media celebrated consumption. But month after month, Michael began noticing something he had never experienced before: financial peace. His savings grew. His investments compounded. Debt decreased. Instead of feeling trapped by monthly payments, he felt increasingly free. The habit that once drained his future had been replaced by a habit that strengthened it. Every dollar he didn't spend on unnecessary upgrades became an employee working for him around the clock. The choice everyone must make. At age 50, Michael looked back and saw two versions of his life. One version would have continued chasing upgrades forever, always earning more but never feeling wealthy. The other version, the path he chose, focused on building assets instead of appearances. The difference wasn't intelligence, luck, or income. It was a simple decision repeated thousands of times. Every raise created a choice: increase your lifestyle or increase your wealth. Most people choose the first option because the rewards are immediate. Very few choose the second option because the rewards take years to appear. Yet those years pass anyway. The most expensive habit in America is not a specific purchase. It is the belief that every increase in income should be matched by an increase in spending. The people who escape that habit often discover something remarkable. True wealth isn't about looking successful. It's about having freedom, options, and peace of mind.